Hello everyone and welcome to another sRs Pro and sRs2 review and performance of our trades. As you know guys, in these videos we're kind of showing why the given trade was taken, and we're trying to walk you through the process of thinking basically, right? What do we do, how do we analyze it, and why do we pull the trigger on this specific setup, and so on and so forth. So let's start with sRs Pro. The previous week is basically starting from 14th up to the 18th, which gives us this list of trades right here that we can cover. Of course, I'm not going to cover all of them. I have a few interesting examples which I believe you will find cool in terms of analysis, and then we're going to switch to sRs2. Alright, starting with the Euro Yen. This is a pretty classical setup, and if you already own sRs Pro, you probably know that we have two basic types of entries. One of the ways to enter is using trendline breakouts, and the second type of entries are based on step trading. In other words, you have trend and then pullback, and then the price is breaking below the previous high or low. In this case is the low, which means you're going to be attacking. Of course, related to all the other indicators that we're looking for in terms of confirmations. So Aussie, and what is so interesting about it is this. First of all, why I picked this trade? Well, looks like a pretty classical scenario, right? We can split it into ABC, the structure to the upside. Some would find a different kind of cycle inside of it, but overall we have bearish trend, and this is kind of confirmed from the higher time frames as well. Sentiment, momentum, 2 out of 3 for both. We're looking for sells. Now the part that I wanted to cover here is the risk reward ratio. Okay, so this is your confirmation candle. This is where the 15-minute chart turns from bullish to bearish and where the attack starts. Why did we take this trade and not wait for pullbacks up to here? Let's say I find this level very nice and then try to look for the sells, because of the higher time frame analysis. Even if you don't know how to read cycles and waves, these two monitors for the higher time frames, in this case is the 1 hour chart and the 4 hour charts, are going to help you for exactly that purpose, guys. Okay, what's happening there? And you can see it's extremely bearish. In this case, we had head and shoulders broken, we had the end of a 4 hour chart cycle, daily confirmation, and so on and so forth. All these things covered in the live trading room. But when the higher time frames are extremely supportive, setups like this one, which when you look at them for the first time and you say, okay, I need to see pullback and so on and so forth, they tend to become a tradable setup. Okay, this is the bottom line. So in this case, we have confirmation from the higher time frames, which allows us to be a bit more aggressive and not wait for the pullback right here. In probably 80% of the other setups, if that happens, I would be definitely looking for a few pips to improve the risk reward and then continue lower. Kind of a retest. Even if it's not completely retesting, just this zone. Okay. This is how it ended, and now look at that. We're talking about this level, I believe, right? Somewhere around here. Approximately. So in this case, it gave us the pullback. It would have been the better decision to wait, but anyway, you can see what I'm referring to. It is an extremely strong momentum, and if let's say your entry is just a few pips above, right, like this, then you miss the entire move, because you didn't want to pay this amount of pips which you lost during the breakout and during the confirmation candle. So the higher time frames definitely play a big role. That was the bottom line from this one. Euro pound is also more or less a similar setup. This time the double wave is a bit more clearer, at least for me this is how it goes. We have a move down which is suggesting bearish continuation. We got the ABC structure. Overall pretty classical, alright? Pretty classical, and the problem that I have with this one is the sentiment. 4 hour and 15 minute sentiment is still pushing to the upside, which is something not ideal, right? Ideally we want everything to be red when we're going to be selling. In terms of momentum we have 2 out of 3, but then we look at the 4 hour chart and the 1 hour chart candles and we see what's happening on the higher time frames. So this kind of setup, even though the sentiment is slightly more bullish than bearish, I think it's still making perfect sense for the attacks here. And then we have CAD yen. In such situation, what's interesting, at least for me, is this one. This is not, but well, I guess we can draw a trend line here as well, like this, right? That would be also valid in a way, but for me personally, this is a wave to the upside, triple wave. You have bearish trend, we can see that here as well, and now the sentiment is really supporting us, at which stage we get a break below the previous low. And this is kind of the situation that I was explaining in the beginning. You have this structure, so in this case this is our last well, I can't really call it a swing on the 15-minute chart, of course, but last pullback ended up here. So this is the valid low to work with, and once we got it after this cycle is completed, we expect it to push lower. Okay, and just like with the rest of the ends, we can see the effect. Dollar CAD was also an interesting situation. In this case we're looking for the buys, and here we have this kind of structure which later on developed this kind of structure, the ABC. Okay, breakout. This is the breakout candle that confirms the bullish signal, and here we have again the same dilemma. Do we wait for a bit of a pullback? This is a fantastic zone, starting from, let's say, here up to here, right? This level. And if we extend it, now this is a bit lower, so I guess this is the next one. Those would be the levels, right? Do we wait for this pullback or not? And this is a decision you gotta take for yourself. If you believe that you might be missing the trade and the higher time frames are completely supporting you, you can attack immediately at that stage. Or another very interesting principle that I'm applying is I just split my trade into two parts. So if I'm risking 1% in general for a given trade, I will do anywhere between 0.4 up to 0.6% on the initial entry, market entry, and then I'm going to put another pending order wherever the pullback zone I'm expecting to be, with the remaining part or the remaining portion of my 1%. Okay, so basically split it into two parts, and if it gives you the pullback, then the second entry will be triggered, and then you have kind of averaging out your position. So one entry here, one entry here, depending of course on the ratio, 40, 60, 50, 50, whatever, you will drop the average entry position a bit lower. So yeah, that's about dollar cut. In this case we have a consolidation on the 4-hour chart, which means we might be looking at further continuation up, which we don't like missing, unfortunately. This one, instead of going up, it simply pushed lower, kicking the stop loss. All right, that's about sRs Pro. I don't see anything else that much different related to the setups. Let's check out sRs Trend Rider 2. Again, we said that we're starting from the 10th, which means here we have the list of 3 trades. Pound Kiwi was a very classical sell situation. Here we have the strong push, and of course this is most likely going to continue, this bearish pound momentum and sentiment. ABC structure to the upside coming after this amazing push lower, and this is the place where we start stacking all these tiny pullbacks, guys. And we covered that in the live rooms day after day, time after time, because when the momentum is too strong, you cannot expect the 4-hour chart to give you this. You drop to the lower time frames and then you attack this. Okay, then you attack that. You cannot expect the 4-hour chart after massive moves of 200 or 300 pips to start making you this beautiful structure so you can join. Usually it doesn't go this way, and when we have the fundamentally driven factors there, it just starts to move. So you have 2 options: either skip it, right, and go and trade something less volatile during that period, or you drop to the lower time frames. So this one ended up pretty sweet for the targets. Gold failed, and this one unfortunately failed on that setup, even though overall it managed to make money. I actually closed some of my positions this morning, but based on different kind of entries. So what did we have here? First of all, we did have the 4-hour chart bigger rectangle, and this is where on the 1-hour chart the price started forming this structure, which as a matter of fact it managed to false break here. Okay, then this trend line was broken on the very last wave up, right? This is our last wave up, and this is where the breakout happened. So that's the first confirmation, and then we're trading the slightly bigger one, which means we can look at this, as a bigger wave, and the actual beginning of that leg starts right here. Okay, that would be the middle one. The actual lows would be right here for this wave, right? So this is the big one. Of course, if you're trading the red one, you would be already out of this trade. But that's the thing, there is always a trade-off. Would you like to be more aggressive or more conservative? On the other hand, if we take a look at the bigger structure, which is doing pretty much the same, we can see that there was already one breakout of this trend line right here, and now we're going to break the next trend line, which is this one. So overall, when we put everything together, the sells look logical, even though that it managed to create one more false break, and only then it started the push lower. And let's cover pound yen. It's just 3 trades, so we're almost done here. Pound yen, just like the other pounds, it started with a fantastic push to the downside, and then on the 15-minute chart we started looking for these entries, guys. So the first thing we're going to notice is that I did an arrow, so a moment. This trend line is attempted to be broken, okay, right here. And then the price, instead of, so basically what's happening is push lower, bounce, and we have a high. Pullbacks are holding the previous low, which means, all right, there is a very good chance we're going to continue higher. Next step, we break the previous high. Perfect. So what we started looking at right here is potential second wave up, not potential, it's actually second wave up, and we're creating higher highs, higher lows. At that stage, we can expect the price to push higher, right? If this is what we're looking for, I'm talking about purely about price action here. And then instead of holding these lows and breaking and creating new highs, we are then breaking the previous low. And this is where everything starts to fall in place. Overall, we have bearish direction, right, from the higher time frame, so we're not looking for buys in any way. Longer time frames, bearish, and this, instead of creating a structure for bullish setups, it becomes a simple ABC. Breakout below the low, breakout below this trend line already affect, breakout below the ABC trend line, the yellow one that you see on the chart right here, plus the low, and the sells are becoming pretty much well, what we're looking for, right? Attacking it. So that would be all, guys, for this week's video. Make sure to join our Telegram channel, for which you can find the links right below in the description and the comment section. Of course, if you have any questions, do not hesitate to drop them below. Again, comment section, me or Vlad, we're going to reply to you as soon as possible. Have a wonderful week ahead.